Good afternoon, ladies and gentlemen. Welcome to today's WhoYou webinar. So in a couple of minutes' time, we're going to start examining customer KYC remediation and how regulated companies can re-verify the identities of their existing customers as mandated by AML regulation. We're just going to give it a couple of minutes before we get started to allow for a couple of stragglers, and we'll get started in 2 minutes' time at 2 past the hour. Thank you very much. Okay, so good afternoon, everybody. My name's David Pape. I'm the Marketing Director over at WhoYou. Thank you for joining us today. And today we're going to look at customer KYC remediation. Many of the financial services companies, the banks that WhoYou's dealing with, have been asking us, how do we re-verify the identity of our existing customers? And so this is some of our expertise that we've gathered along the way. So, so today, if I may, I'd like to initially, let's get the right screen. There we go. So I'd like to just give a quick overview of who WhoYou is and what we're trying to achieve in the financial services industry. Briefly examine the regulations around customer re-verification as laid down in the money laundering regs. And then thirdly, take a step back and say, look, it's all well and good being asked to do this by the regulations, but how do customers perceive it when they're being asked to re-verify themselves, provide their identity details, and how much do they fear that's actually a phishing attack? Then we can examine how to incentivize customers, what kind of levers regulated entities have. Then look at it as the re-verification process, as a marketing exercise, as a communication strategy. And then lastly, I'd like to share how WhoYou helps within this process to deliver a customer verification journey that helps re-verify the identities of existing customers. So first things first, who is WhoYou? So the company behind WhoYou, we've been in identity for many, many years now. We sold our old identity verification company to Experian back in 2012. And this time around, we're trying to disrupt identity and do things very, very differently. The first difference with WhoYou is that we are trying to democratize identity technology and make identity technology available to people as well as to businesses. One of the reasons for that is that in today's digital age, whereby increasingly we do our business online, we buy things online, we shop online, we meet people online, we transact online. In today's digital age, sometimes one person wants to check the identity of another person. So our consumer site, WhoYou.com, is there to act as a peer-to-peer identity confirmation service to help people when they need to know who they're dealing with and they might already have a little bit of doubt about who it is they're about to transact with. And that might be to be hiring somebody as a nanny or a tutor. It might be before they're about to give someone £4,000 because they've met somebody on a marketplace and they're about to buy their second-hand car or hire out their holiday home. So on the consumer side, we see lots of very interesting traffic. We pretty much see the driving licenses of beautiful Russian supermodels on a daily basis. Occasionally we might see the passport of somebody who purports to be the President of Barbados, and obviously in those circumstances it's our job to go back to our customers to say, look mate, whatever you're doing, don't send them money, they're using a fake ID document. On the B2B side of the house, what we're trying to do differently there for the banks, the money transfer companies, the peer-to-peer lenders, the prepaid card issuers that are using our technology is to recognise that, look, there's lots of different companies out there that do identity technology, but by and large they all broadly do very, very different things. There's some companies that are good at database checks, other companies do document verification, other companies do PEPs and sanctions, other companies do facial biometrics, other companies might look at somebody's digital footprint, social media accounts to ascertain information about their identity. And because we're old enough and ugly enough, we're the first company to really unite and blend and combine all those different aspects of identity technology into one platform. So more about how WhoYou works later, but essentially what WhoYou is trying to do in financial services is not just make sure that customers can comply with their anti-money laundering compliance requirements, but it's really here to offer KYC as a technology to reduce account opening and abandonment. And we actually did a study earlier this year by interviewing 5 of the top banks here in the UK to look at what the success rate was for online applications. And the top level answer is that just 53% of applications for online for bank accounts in the UK were finished, and they actually got to the end of the process. So that means that just under half were actually being abandoned during the process, and the reason for that is over-reliance on traditional approaches to database identity checks, and in some cases asking customers to come into the branch to provide a copy of an ID document. So clearly KYC technology has a job to do to help satisfy not just the compliance requirements, but also to maximize customer conversion, to minimize the cost per customer acquisition. At the same time, of course, the job of KYC, as we all know, is to make life hard for the criminals, to target hard in the UK against financial crime, terrorist financing, and money laundering. And so WhoYou is here to do this and to take the pressure off staff who are being asked to verify a Bulgarian driving license, a Mexican ID card, or a Canadian passport. So it's about preventing identity fraud and making life harder for the fraudsters, but at the same time making sure that clients can comply with the 2017 money laundering regulations. So that's probably a good jumping in point to look at these regulations and ask what it is that the regs say in terms of re-verification of existing customers. So this is from Part 3, Section 27 of the 2017 money laundering regs. I can confess happily to being a bit of a compliance geek and going through regulations to see how and where WhoYou can help regulated entities comply with their money laundering compliance requirements. But there's there's lots of different sections in the regulations around re-verification of existing customers. This is just one part of it. So really it's all got to be down to the merchant's risk-based approach, of course, about when they re-verify the identity of their customers. And I guess that's covered here in point D. Bottom, any other matter which might affect the relevant person's assessment of the money laundering or terrorist financing risk. So that's all on a risk-based approach. There's no one-size-fits-all approach. It's all down to the customer, the product, the nature of the transactions, and that kind of thing. But there's also a trigger that's supposed to kick in, the change trigger, which is when the regulated person, regulated entity, sees that the identity of the customer or the beneficial owner behind that customer has changed, and that could be a change in status, a change in address, a change in name, and so on and so forth. And the other change trigger, of course, is transactions that look out of place in terms of the rationale for the business relationship, the rationale for the transactions, and anything that looks out of the ordinary there. And of course, the relationship between the customer and the regulated entity, and the change in that relationship can be deemed as a change in product, a change in behaviour, and so on and so forth. So, in other words, re-verification of existing customers has to be carried out not just at the start of the relationship, but re-verification has to be carried out during certain stages in the customer life cycle, the customer relationship. And that's, again, no one size fits all, but that's a brief overview of where you can find the relevant section of the money laundering regs in terms of the duties for re-verifying existing customers. So one of the main challenges that we hear of in terms of re-verifying the identity of customers is those customers then have lots of fear around the threat of phishing, fraud and identity theft. And quite right that they do as well. It's important that consumers are aware of this and act accordingly and don't blindly give over their details. 1 in 3 of us have been a victim of this kind of fraud by now. Here's a couple of examples on the screen of fraudsters pretending to be Halifax, HSBC, Apple or PayPal, saying, hey, we need to update your details, we need to re-verify you. Oh, there's been a problem on your account, can you please log in here and provide your account login details? So the challenge that the regulations lay down to regulated firms to re-verify the customers is, of course, somewhat complicated by customers' fear over identity theft and by the threat of phishing. So it's vital to consider that in the light of how the customer is going to decode any request to re-verify themselves, to reassert their identity. So really the question is how can merchants effectively ask their customers to re-provide KYC information whilst assuaging them, whilst helping give them comfort that this isn't a phishing attempt by fraudsters. So I think the answer there is to look inside your business and look at your customers' behaviour and look at the different customer touch points that you have in terms of how do your customers interact with you and which of those touch points, which of those interactions that carry the least fear, the least perception of identity fraud and phishing. So what we've done here is to profile the different customer communication touch points that a regulated entity, a bank, a lender, a prepaid card issuer, a wallet might have with their customers, and then rank them from low to high in terms of how suspicious the customer might be that this is actually a fraud or phishing attempt rather than a legitimate interaction with their financial services provider. So right at the top in terms of the least risk, right at the top in terms of least risk is the telephone banking service, where of course a customer has actually called in to the number they normally use, or they've taken the number from their provider's website and they've called in to go over some other matter, and at that point that's the least suspicious environment where the customer is happy to provide some details for re-verification purposes. Likewise, it's a fairly low risk environment once the customer has come to the merchant, once the customer has come to the financial services entity. This time, instead of coming in through the phone, they've come in through the online banking facility. And certainly the online banking facilities that we all know and enjoy and love these days, most of them have a messages functionality where you have messages from your bank informing you of interest rate changes or changes in your account. Or of course, if that re-verification request were to be served, there's an ad or a pop-up once they're inside that app or their online banking facility. That would be a fairly trusted environment as well. Another environment that is a good way to promote this kind of customer re-verification program is on the bank statements, whether that's a physical bank statement or a PDF statement that's delivered by email. But then as we start to get down into the realms of receiving a letter, receiving an email, receiving an SMS, then that's really where customer suspicion is triggered and starts to kick in. So they're the more troublesome means of communicating with customers. And of course, many banks actually will say in their terms and conditions, we won't communicate with you to ask you for additional data, to ask you to provide your account details. So that kind of makes it doubly complicated for the re-verification, the remediation process. So thinking through some of the lower risk environments then, this is probably the least risk environment whereby a customer calls in to the customer service centre and they're asking to check the balance on their account or the value of their account, or they're asking to change a direct debit. So at that point, of course, the customer services team resolve that query, and then they will say, oh, there's one last thing today, madam. As part of our policies to prevent financial crime, we're required to re-verify the identity of our existing customers. Is that okay? At that point, the customer is in that high trust environment, and yep, sure, what do I have to do? Oh, thank you, madam. You're going to receive a text shortly asking you to use the WhoYou identity confirmation service to re-verify yourselves. Is that okay? And then the customer service agent sends the WhoYou request by text or by email at that point. So that's one particular way to get around the challenge. And then, of course, once they're in the verification process, that they get taken through the WhoYou verification request, and they're asked to provide information to re-verify their identity. More on that process later. So the next thing to consider really is how to incentivize customers to undergo the re-verification process. Of course, it's something that an LRO is very, very keen and passionate about. It's something that the existing customers might not have time for in their busy lives, and it doesn't really mean anything to them. Unless you start to think from the customer perspective, that is. So in other words, what's in it for me? That's the mindset that you have to enable to drive behaviours, to drive activity, to stimulate a customer into doing something. So, in other words, what new product or feature might they not be allowed to use unless the re-verification is completed? One of the things that we've seen the challenger banks be very successful at is the wait list. So, in other words, register now for this new cool fintech instrument. And you'll be the first of your friends to be able to enjoy this new account. So the waitlist approach could be one way to do that, or certainly playing on FOMO, the fear of missing out. How can institutions use marketing tactics, really, I guess, to encourage people to come back and re-verify themselves in exchange for access to a new feature or a new service? At the same time, of course, it's not just about what's in it for the customer, but the regulated entity certainly has some levers. They, according to the terms and conditions of their account, they may be able to restrict some functionality on the account, whether that be the withholding of interest payments, a freeze on direct debits, a moratorium on activating new cards until the re-verification is complete. There's obviously a sliding scale of impact there. The longer the account goes unverified for, that the merchant can bring to bear. So that's the carrot and the stick. And the other way to incentivize customers, of course, is to get creative and perhaps gamify the process. So in other words, congratulations, you've now done your 1,000th transaction with Bank ABC, or perhaps, thank you very much, Mr. Customer, you've been a loyal customer for the last 10 years, now we need to re-verify your identity. So there's some creativity that can be put into the process as well. So the next thing to think about really is the communication strategy. In other words, how are you going to go about the whole process? And the first thing, as with any marketing or communication approach, is segmentation. So obviously within the existing base, some customers can be re-verified using database checks, only as long as the relevant consent was obtained, the point at which that customer applied for that account. So say, for example, if it's a customer that applied, that's been a customer for the last 10, 15 years, that relevant clause in the terms and conditions may not have been present at the time of origination and onboarding, or perhaps that customer came through a broker channel where the consent to perform database identity checks was not obtained. So that's the first point of customer segmentation. The next next thing to do in terms of segmenting the customers is to look at what data you hold for those customers, and that of course informs what channels you can use to deliver your communication about the re-verification requirement. Now, address, of course, is fairly universal. Email is universal, although it's not always accurate, and people do change email addresses over the course of time. And mobile phone numbers. So the latter two, of course, email address and phone numbers, are subject to customer data entry, and can, of course, be slightly incorrect. And the other relevant segmentation, of course, is age. So in other words, if the customer demographic is under 18, under 19, then the database check route to re-verify their identity might not yield much success. So in which case you might think of using an alternative approach to gather an ID document, an address document, to re-verify them that way instead. So once you've done your segmentation, the best way to look at the re-verification communication strategy is as a series of cells or cohorts. So in other words, you're looking at cell 1, you know you can satisfy those with database checks, and then cell 2, A, B, C, based on whether you have an email and mobile phone number or both for them, and then also to look at the different strengths of remediation that you may require. Obviously, the level of verification is in proportion to the risk in the transaction, the risk in the account. So you would also look at it as cohorts based on the level of re-verification that you have to go to for those particular customers. And lastly, I think at this stage, once you have the data's in your hands, you segmented it, that's the point at which you can take this to be a data cleanup exercise. So in other words, look at all the email addresses that instead of saying Gmail, say Gmail and other such little typos, clean up that data and get a more accurate customer database before you actually go to stage 2 and beyond in terms of delivering the remediation process. So stage 2, of course, is thinking about how you're going to communicate to these customers. I've found in marketing over the years that the best process, the best way to communicate anything, whether it be internally or externally, is to follow the old adage, tell them what you're going to tell them, and then tell them what you've told them. So in other words, a multi-phased approach to your communications. And I think this sort of drip-feed process as well also helps alleviate the fear of phishing and identity theft as well. So the approach I would take would be to give the customers an initial heads up, and this could be through the website, through an email, a formal reminder that perhaps comes in the post, and then the WhoYou request, the re-verification request, can be done within sync of those that three-pronged approach actually. So that's how I would follow the communication strategy, and of course it's really important to align the internal resources as well. Prep your business in terms of both the inbound and the outbound efforts. So in other words, you're bound to get some questions from customers. Look, I've been a loyal customer for the last 20 years. Surely you know who I am. Why do I have to reconfirm my identity now? So you're absolutely going to get that question and 1,000,001 others. And so one of the things we've learned here is that it's very important that firms that are going through this kind of process, that they have a really good internal training process to say this is going on. And of course, in terms of being proactive and doing some outbounding, perhaps using the customer services team to be calling people up saying, hey, we need to take you through the re-verification. Can you please give us a minute to talk through the process? So there's obviously a key internal component to that as well. So that's some of the learnings we've had from working with our clients over the last year or so. What follows now is a few screen grabs about how WhoYou can be triggered to create a re-verification process to deliver a really great digital customer journey that takes your customer with you. So here we have a couple of screenshots. So one particular way to trigger a WhoYou request is to send an email or send a text message to the customer, obviously with lots of warning beforehand and availability of information to make sure that this is a legitimate request. And then once the customer clicks on that link, they then get taken to stage 2, which is a landing page that explains why they have to re-verify their identity, explains the process they're about to be taken through, perhaps with a little video of what they're going to have to do, and so on and so forth. So then stage 3 is really where the hard work starts and where WhoYou starts to re-verify the identities of the customers. And of course, this process is just the ones that can't be re-verified using the traditional database approach. That's obviously the tried and tested way to re-verify, to verify someone's identity. But the first thing that WhoYou is going to do is do a little bit of geolocation to see where the user is when they perform the WhoYou request. But we translate that location into latitude and longitude coordinates and a location score by geolocating the browser and the device that's being used. That's very much an invisible part of the process, but the first thing the customer is going to have to do proactively is to take a selfie. And obviously the selfie process is so we can perform facial biometrics between the face in the selfie and the face in the ID document. And this goes above and beyond the AML regulations, of course, but in this age of data breach, it's a good idea to perhaps put new defences in place, not just to rely on the existing processes. And so the selfie here really is a bit of impersonation detection to prevent the fraudster from stealing someone else's ID document where they might have a passport or a driving license, but they wouldn't have the face. And of course, liveness detection is a very important part of that process as well. So the next stage the customer goes through is the digital footprint. This is very much an optional part of the WhoYou process, but again, it's another key impersonation detection functionality. In other words, fraud prevention is all around putting hurdles in front of the customer, in front of the fraudster rather. So the fraudster might jump over hurdle A or hurdle B, but they'll fall at hurdle C. And these days, digital footprints from based on how we all buy and bank and shop and chat away around the internet provides a very, very rich source of identity data. So what WhoYou has done here is to integrate into Facebook, PayPal, LinkedIn, Amazon, Yahoo, and so on and so forth, Microsoft Live, as a means to be able to gather information about that customer's identity and use that information to prove that it's a real digital footprint, and then be able to cross-reference and compare the information about the identity to the identity data that they see in the identity document or the proof of address document, to say, hang on a second, so we've got a real good ID document that we verified, but how much do we trust it? Can we increase the trust in that ID document? Can we increase the trust in that customer identity overall by using multiple sources to verify the identity? And of course, our digital footprints are just one of those sources we can use to do that. Of course, WhoYou doesn't take the digital footprint data at face value. It tests it and measures it and interrogates it first. In the instance of Facebook, for example, what we do is we evaluate something like 300 different parameters of that Facebook account. For example, we might look at how old the account is and how many people that they're connected to. So in other words, is it an account that was made last night and are they connected to like 5 other dodgy profiles? And does this look like an account that's been created for the purposes of defrauding bank ABC? Or does the profile have a history of going back 2, 3, 5, or maybe even up to 10 years? And how many people are they connected to? What we'll then start to look at is the amount of content that's being put through that digital footprint. So in other words, how many albums, how many photos, how many videos, how many posts, how many book reviews, and so on and so forth. And we'll measure that content over the course of time, and we'll weight that content over the course of time. Very recent content we'll mark down in case that's a fraudster who's frantically trying to legitimize this newfound digital identity. And so what we're looking for is content spread over the course of time. One of my favorite pieces of analysis that we do on a digital footprint is to measure not just how many people they're connected to or how much content they put through that, but we actually measure how many other profiles have interacted with that profile. So for example, my Facebook statistics are that I'm connected to 147 people, but 297 other accounts have actually interacted with my content. So mathematically, exponentially, that makes it really, really hard work, much harder work for a fraudster to create a believable digital footprint than it is to be able to procure and produce some form of identity document. So that's the digital footprint section. It's a great way to gain all-round identity confidence in a customer, as opposed to saying, yes, they've given us an ID document. But it is an optional part of the process. Not everybody has a digital footprint. Not everybody might want to use their digital footprint. The way that some of our clients use this is they mandate the digital footprint on high-risk transactions, and obviously risk is defined in many, many ways. So the next stage, of course, is the document verification. This is really translating what is a current process in the bricks and mortar world and translating this for the internet age by enabling the ID document to be gathered during this session and verified during this session as well. So the merchant can really choose which ID documents they're happy to accept, and in fact this can also be used on a risk-based approach. So supposing it's re-verification of a customer who is in a high-risk bucket, then you might be saying, oh, this re-verification must give us 2 identity documents. But if it's a low-risk customer, then 1 identity document may suffice. And of course, what WhoYou is going to do here is to verify the security features on the ID document, analyze the document for signs of forgery and tampering, and produce a report, a confidence score, to say whether or not the document has been classified as good. And of course, what we can also do is move on to the proof of address document collation. And what WhoYou will do here is to compare and contrast the address that's on that customer file as per the application versus the address that can be seen on the utility bill, the bank statement, and so on and so forth. So that's really helping reflect the name and the address, the name and the date of birth verifications. Instead of being through traditional database routes, it's being offered through the ID document and the proof of address document route. Of course, the regulators, they do like to see the database route first, but if that route isn't possible, then this is another good way to verify the identity. So what we also do, of course, is we upload the document, we guide the customer through the process, and if the customer gives an image that is out of focus, or if there's too much light reflecting off the image, or if they've got the hand all over the image, or they've only provided a partial image, our computer vision technology will triage that document and will display a dynamic error message to go, oh, sorry, that image is out of focus, can you please take it again for us instead? So we really try to make WhoYou as a platform that maximizes the number of customers, the percentage of customers that can get through successfully the verification process, and we do that by encouraging them to provide a good quality image of their ID document. And then, of course, once all that process is finished, and it takes our document verification process can take as little as 30 seconds. And once WhoYou's done its work, it's verified the ID document, it's cross-referenced and correlated the data from the digital footprint to the ID document to the proof of address. It's compared the name and the date of birth on the application to the identity sources. That's the point at which WhoYou's job is done, and WhoYou will exit and pass the results of the verification back to the merchant and redirect the customer onto the next stage in that digital process. So if it's a re-verification process, it'll be redirecting the customer back into their online facility perhaps, maybe for an upsell or cross-sell process, or in the case of origination as an application, we'll be redirecting the user back to the next stage in that application process. And of course, this is the WhoYou identity report that we serve back when a customer has been verified. And obviously what you see here is, yes, the customer's passed, yes, there's been a good identity document, yes, we've verified the identity of the customer, but as opposed to just putting the ticks in the box from a compliance perspective, what WhoYou also does is to provide an identity confidence score. And the way we verify the confidence score, the way we produce the confidence score, is to say, oh, okay, so how many sources have been used, and how much data did we garner from those sources, and then how well does the name, the age, the date of birth, the gender, the nationality match across those sources? What was the quality of the facial biometric match? And overall, that rolls up to our master score. And again, this is where WhoYou can be used on a risk-based approach. In a high-risk transaction, the target identity confidence score might be 70%. In a low-risk transaction, it might be 50%. So WhoYou offers not just a compliance process, but also a risk-based fraud prevention process as well. So that's very much how the WhoYou process works. That was a quick tour of some of the considerations in terms of how to think about fear of identity fraud and how to maximize success rates in customer remediation programs. And I'll be very happy to stay and answer some of your questions. So please do feel free to use the question box in your GoToWebinar panel. Thank you very much for your time. I'll be happy to take any questions if you have any. Okay, so we've got a couple of questions come in. One question is around geography and how universal the service is. So basically, the WhoYou document verification process works in over 200 countries in terms of passport, ID card, driving license, residence permits, where it's available. So it's very much a global service. And then in terms of the digital footprint analysis and interrogation, that service is global also. Let's see, are there any other questions? So yeah, just on the global nature, of course, WhoYou is designed to be able to verify the customers that can't be verified using the traditional database approach. And so obviously there are databases in some countries, but not all countries. Outside of the US, UK, Canada, Germany, and perhaps the Netherlands, the quality of the verification databases is reduced. And so therefore that places increased importance on creating a digital process to verify the customer, as opposed to asking them to email something in, come into a branch, and so on and so forth. So the other question we have is, how long does the process take? So that depends. What WhoYou does is offer both a quick automated document verification process and also a manual agent review process. So depending on the kind of document it is, and also depending on the image quality, around about 70% of the time we'd hope to be able to use our automated verification technology, and that will take 30 seconds or thereabouts. On average, 98% will be done in less than a minute. Now, where we have a poor image that can't be verified automatically, or where we have an ID document that can't be verified with our automatic technology because it might be a paper-based document or so on and so forth, maybe an Irish paper copy driving license, that's when the document goes to our manual agents, and that sort of turnaround time is that I think 98% are done in less than 10 minutes, average 5 minutes, and so on and so forth. But obviously SLAs can be agreed on a client-by-client basis. Okay, so I think they're the only questions we have for today. Thank you very much for listening to the WhoYou customer remediation webinar. We'll obviously make this available as a download, a view-on-demand webinar as well. Thank you very much, and everybody have a nice day.